Philippine Stock Exchange kicks off trading at 62.95. Joining us today for her take on the market, we have ATR Asset Management Chief Investment Officer Sandra Araullo. Hi, Sandra. Good morning. Welcome back to Market Edge.
Good morning, Mimi. Good morning to your viewers.
All right, so we just got unemployment numbers this morning, and so far the numbers are pretty good. The labor market is improving. We're also looking at the third quarter GDP coming out this Thursday and foreign direct investments on Friday. Sandra, I'm curious, is this the sort of week where investors should be ready to pounce because we're either at or nearing oversold levels again? Or is it time to hold and keep dry powder still because you think there might be more downside risks coming?
That's the million-dollar question, isn't it? Timing the market is certainly a fool's errand, I would say. But to your point, there are reasons to start putting money to work. And especially in times like these, the opportunity is attractive. It might not. You really have to adjust your mindset on really being an investor and putting money in for at least 3 years. That's considered short term in investment parlance, actually.
3 years, all right. And with 3 years, what sort of returns can investors expect if they have the patience?
No doubt, easily just back of the envelope number, at least 20% CAGR for Philippine equity markets. I mean, that's just return though. I'm not yet factoring in the risk side of things. On the fixed income side, you can hold 10-year paper now at 7.5 hold to maturity, but you need 10 years there. So the thinking should be, do you believe that in 3 years' time, we will still be in a period of extreme uncertainty like what we're seeing ourselves in today? And the view, or at least our view, is that that wouldn't be the case. We're already pretty much in a contractionary phase, and it's part and parcel of your standard economic cycle. So there should be a recovery phase that follows such a period.
All right. Aside from these macro numbers, we're halfway through third quarter earnings season. The numbers don't seem to be moving the needle much, at least from where we stand. It appears that we're more focused on headlines now. Inflation numbers, jobs numbers, central bank speak. Do you agree?
Indeed. But this is where your opportunity comes out, because the real drivers of stock price or value ought to be earnings, valuations. And while that's not what's grabbing people's attentions, the smart investors know to look where others are distracted. Not to say that the other concerns are not important. The uncertainty really is high. I mean, there are a lot of things that are yet to happen. We do know we're waiting for more earnings results. We're waiting for earnings assumption changes. We're waiting for more macro data. We're waiting for developments on the geopolitical risk front. So it is valid to consider these uncertainties and really tailor your investment strategy towards what we can see in the horizon.
All right, but here's what we can see today. More earnings numbers. I want to start with DMCI. Blockbuster earnings, rather, posting an 84% jump in their third quarter core net income to a record 7.4 billion pesos. When you look at DMCI, I know that everybody sees a dividend play. Is this an attractive stock to hold at this point, given where share prices are?
You know, in fact, from the beginning of the year, no, parang the whole reopening narrative, I think it's still playing out, and it's not just DMCI that's giving us really higher than expected earnings results for the third quarter. In fact, about 75% of those that have reported have beaten estimates, no? So it's a stock pickers market. Certainly names like DMCI and others are showing their proposition and why they ought to be part of investors' portfolios. And yes, as a dividend play, maybe that wouldn't be the bigger driver now for why you would want to add DMCI in your portfolio because of where bond yields are. But from a growth and diversification standpoint, certainly has a space in or a place in an equity strategy.
All right. Still on earnings, Bloomberry of Enrique Rizon, which operates Soler Casino and Resort, has returned to profitability for the 9-month period, net income hitting 4 billion pesos from a net loss of 2.9 billion year on year. When you look at the earnings, I'm curious, everybody says many names have beaten expectations for the third quarter. Is this it? Or are you thinking maybe there's a lag effect? Maybe next quarter's earnings will not be as good. Next quarter or first quarter of next year. What is the outlook on earnings here?
Well, you do have the base effect for earnings, and we were coming from a period of low activity generally. And this is really just proof that the pent-up demand is real, no? And then we're also coming into holiday season. So maybe fourth quarter results wouldn't disappoint either. We're more mindful of going into 2023, the concerns around inflation and the BSP being on a 1:1, or they're trying to track how the Fed is doing their own tightening cycle. That comes at a cost, and we're very mindful around how that cost will trickle down. So for now, it hasn't really stifled growth and earnings of corporates, but if we carry on this path and the risk of policy misstep increases, that becomes problematic. But for now, that's not our base case.
All right. Still on earnings, I just want to go over very quickly, Sandra. DNL, the chemicals maker, reporting 9-month earnings of 2.5 billion pesos. That's also up 17%. And just very quickly going over the other stories, RCBC has been authorized to issue UMID pay cards to SSS members. State Pension Fund, GSIS, investing 2.2 billion in Energy Transition Mechanism, or ETM, of ASEN for SLTech, South Luzon Thermal Energy Corp. Sandra, I'm not sure if I asked you this before, but are you a big fan, a big believer of the renewables game?
Oh yes, certainly. I mean, in fact, I was just reading about climate injustice, where you're suffering the brunt, or the Philippines suffers the brunt of the global warming and climate change, but we're not exactly the biggest contributors to it. Every little bit helps. It's certainly investor focus on ESG and SDG. It will carry enough momentum, I believe. It's been a theme that's been going on for even before the pandemic. I would say maybe there's just a little bit of we encountered a little bit of delay, I guess, in. But as a team, we're getting more and more sustainable development goals based investment strategies, and I think it's really responsible investing finally finding its way into the capital markets.
All right, but are investors willing to pay a premium for these renewables and ESG companies?
Yeah, so it's a balance, no? You need to finesse it. Like, for example, renewables as a future or a theme. Nobody, I think, maybe just the climate change deniers wouldn't put money in that kind of a proposition. But at the same time, there has to be change. There has to be a transition, and there will be shortages on the traditional energy side, and from a pure earning standpoint, or what can drive prices, supply and demand will come into play, and you just cannot completely put all of your eggs in one basket, so to speak, and you really have to transition with the energy transition. Portfolios need to transition with the energy transition.
All right. Speaking of ASEN posting 9-month net income of 5.4 billion. That's down 16%. Sandra, I just wanted to bring in the opening numbers. We're about 11 minutes into trade. So far, so good. The PSEI is still up by 0.5%, 33.6328. Going back, PAL, Philippine Airlines, launching a Cebu-Cotabato direct flight on December 1st. So they're really expanding their domestic network. And the Transportation Department says construction of Ramon ang 735 billion peso Bulacan Airport is now in full swing. Travel and everything and all companies that are connected to travel, whether they're airlines, hospitalities, hotels. Are you betting big on travel? Do you think 1 year time is enough to see things turn around for these names, or expect a longer time horizon?
The prospects are certainly better than they were a year ago, but we think that all things considered, there would be other winners, or there would be bigger winners than the travel industry at the moment. Particularly maybe on just the fiscal side of things, these or all of these activities are seen to counter the tighter monetary policy that we're expecting, and that's good overall. It's good for banks, for example, property sector. I mean, at the end of it, maybe as long as we can continue on with a good pace of growth, not blowing it out of the water necessarily, but at least relative to all other economies, we're at the 6%. That's pretty decent already, and considering the likelihood of a scenario of a shallow or moderate recession in the U.S., considering everything, that's relatively constructive as it is. And again, from a timing standpoint, we certainly advocate for time averaging. We don't want to wait for the bottom, because by the time all of the uncertainties are out of the way, the market would have moved already, and would be a missed opportunity if you stay on the sidelines.
All right. And for those who don't want to stay on the sidelines, they might want to look at this stock that is your blind item for today. I think you like this stock. So why do you like this stock? Don't tell us, just describe. We're going to leave our viewers to guess what this is. So what do you have for us today?
It does belong to a sector that we are the most constructive on. It's not a lot of people are looking at this name, actually. I would say it's a little bit under the radar, but from a growth standpoint and valuation standpoint, and also from a it's a tactical play. We think by next year it stands a good chance for getting added into the index, and when that's the case, you get a lot of flows. I mean, a lot of passive funds or ETFs or what have you who just invest in the index. Certainly, that's something that can push the price of this stock closer to fair value. We think it's quite at a good discount. So that's why we like this stock.
All right, we're just going to have to guess which stock this is. Thank you so much, Sandra. Always a pleasure speaking with you. Have a great week ahead.
Thank you, Mimi. Thank you, everyone. Good morning.
All right, good morning.